All right, guys, welcome to October 2nd. Wow, October 2nd coaching call. We are fastly approaching, we are 18 days away from just as a refresh reminder, Bitcoin weekly prediction of the time cycle with Monday, October 20th, predicting some kind of an inflection point. If we were going to go sideways and perhaps test down here, then, that would be great support for a reload, but we actually are now ahead of that, in my opinion. And now we are well on pace to be testing the trend line by that week. So it's going to be an inflection. It's either going to be a false breakout or a trend line breakout. Based on everything that's happening with the rate cuts and what you might think this fourth quarter could be, it could be a breakout, but we don't know that until it happens. So that's where we are for Bitcoin. Now let's go talk about this weekly signal here. Okay, so all right, I gave the signal on this day, particularly when it went back red into this, right? So a couple things on the daily, what we have is beauty principle in play here. When it went down to this price level, it danced around a little bit, pulled back, and then broke out. It danced around a few days, very similar, and pulled back. That's the beauty principle. And then if we go on the weekly as well for SUI, this is why I had it as a portfolio setup and not just as a day trade, because if we zoom out on the SUI weekly, we are hitting major trend line support very simply. There was a zero line reject in the CCI. This in and of itself is a double bottom. So you have a double bottom and you have a multi-month, year practically trend line where we are now having a mature balance that's consolidating. So because this was consolidating and there was volatility contraction and the balance was mature, there's good odds now that if we get good strength out of here, we can get a breakout, right? That's the idea behind it. So we reloaded here, and that's where we reloaded the portfolio. So we're happy about that. That was the trade this week. I believe it was on Tuesday. But obviously, there's intermarket synchronicity. So if you reloaded into Ethereum at the same time, that's great. And also Bitcoin at the same time as well. So I was using Bitcoin as well to time the SUI portfolio reload. I'm using intermarket relationships. If we look at Bitcoin, right, simply it was just at great support. There's really nothing else to say, right? You just had to be patient to wait for support and then dive into it. Ethereum had a little bit more clear context because as it broke up out of this giant trading range, once it broke up into the balance, you have a false breakdown pattern, which is very bullish. I told you guys this was bullish as soon as as soon as this pops back up into balance, this trend's done. Okay, it has very high odds now to go test the highs of this balance where we have a resistance zone drawn here. SUI had beauty principle. We didn't quite get to this trend line down here, but that's okay because there was horizontal support here and it was behaving very similarly. So it had an edge for expectancy. If you just play an accuracy, or if you just play accuracy-based thinking and not expectancy-based thinking, then you wouldn't have bought here because this is the perfect reload spot, right? And then you wait for some kind of push into this. That would have been ideal because if you pushed into that, probably would get an action reaction. You also have right here horizontally in confluence with that a launching point of directional conviction. But if you only play to win, then you're going to miss out on expectancy based moves. This was worth taking a loss here to try this out because of the beauty principle. Every time it touched here, we moved up. And the beauty principle, look how this price behaves around this moving average. Now, granted, moving averages are more important in directional markets. This is a sideways market, but just see how this works from a price perspective at this level. Support up, breaks, but then acts as resistance, breaks out, then acts as support again, support, support, support. So it's obviously something that people are paying attention to. That's how price is behaving around there. And then the little circle simply represents that we had a few days of consolidation with a red down day, a few days of consolidation. So we bought at the bottom of this candle, right? We bought right when the trend line on the weekly for SUI was. But this is how you can actually do timing and not just price levels. See, an amateur might just buy this as soon as it comes down here. They're not thinking about time. I told people when this came down to here that the setup would be next week. See, I'm even helping people from a time-based perspective because every time this came down here, there was some time here. These are weeks. There was a week. So next week, I said that's when we would get it. It came right back to halfway between the candle bottom and the tip of the wick. So that's a beautiful setup, halfway, just pure candlestick patterns. And you had the trend line acting as support. You can't get much better than that for a reload. Now we didn't know we were going to get 10% in less than 48 hours, but that's the benefits of working in principal profit trader. You might get those, right? And the crazy part is that we didn't take 100 losses to find that out. We were sidelined waiting like a cheetah in the bush for the sickest, weakest prey, even though we are the fastest predator. We want the sickest, weakest prey in order to increase our odds for a kill. And that's the attitude you have to have when you're trading for expectancy. You have to think about your stop first. If you think about your stop first, then you will mitigate that energy of missing out because you don't mind missing moves that are not part of your trade plan. So if we look at the SUI 15-minute, take a look at exactly where this happened on Tuesday, right? The setup was here. And we have a stop below the 28th low. This is a great invalidation point because you have a confluence of this day, and these days lows, creating a range low here, right? So when you can have a confluence of multiple days, then your stop gets better, right? And it's in the right context. So we bought here, perfect, and we are holding. We have not taken profits on this because this is not a day trade for us. We have higher targets on higher time frames. So I'm not going to be getting in and out. Now, day trading wise, the frequency, there was plenty of opportunities to day trade. This was a day trade as well. If you took this right when I gave the SUI signal, half off, 75% off, all out, right? Then the next setup was you don't want to trade the breakout out of this contextually lined balance, which I warned you about by drawing it in yellow. But I told you we were going to have most likely have a bounce breakout setup, but we're not going to take a breakout because the odds weren't super high that this was just going to break out at 9:30 in the morning because the volume was low and other reasons why. But oops, I don't know why it's doing that. Let's see. Did I really just do that? See if I can. Good. So yeah, I mean that's the setup. I mean, like I said, a lot of trading is not pushing, pushing, pushing. Now, granted, there's great edges in the day trading too, but life circumstances would have it for me that I basically could barely activate the energy in order to do a reload. Because as I'm doing the reload, I'm also telling myself, well, if I'm reloading the portfolio, then I should be pushing into my day trading account big time for the income because we're going with the bigger time frames, but I just couldn't do it. I'm dealing with a lot of stress. So I'm happy that I even got this because I probably shouldn't even have been trading at all. But that's the benefit of the quad exit. Like even if I didn't give the reload, I wasn't all out of my sweep position in my portfolio. I was only half out. So I still would have been, participating in this if I didn't reload it. Not as much and pissed off about it, but now my trading account, active trading account, is not participating in it. I didn't give a signal for it, even though I saw it, but that's okay. I just couldn't handle that level of stress. Um, but yeah, just looking at the market, it's looking pretty bullish, right? They all kind of move together. So that's what we're dealing with here is sort of everything following itself regarding Bitcoin. But I use Bitcoin a lot the time SWE, but then as you can see, SWE has gotten me, it gets you a better beta ratio. So, SWE was up 8% yesterday. Bitcoin was not anywhere near 8%. It's up over two today, almost 2.5. So, we're talking about over 10%. And if you actually go from the lows of the day that I got it, it was much lower. I'm just factoring in the low of that day. So this is a big move. We usually don't get this type of percent this quickly, but this is what happens when you have patience, timing, factoring in, because the idea is that like some type of DCA guy is just gonna, oh, it's half off, let's just buy. Well, they're only thinking about price levels, they're not thinking about time. Because when you have capital tied up, there's a huge opportunity cost, even though it eventually might work out for you. If you could understand how markets function through time as well as the price level, then you're going to have more capital available and less of it tied up. And that's what we want. But overall, yeah, looking very strong. I mean, I don't know what else to say. This is end of October is what we predicted going into October, September, kind of whatever. We kind of got that. And now, October looking a little bit even. I was predicting more towards the end of October that we get this strong move, but we'll see what happens. We still have, guys, major resistance above here. You can see this giant high volume node here. Do not think that we are not going to, possibly take profits again when we come up here, because that's what we've been doing the entire time. Every time it comes up here. Now you might say, well, the real highs are up here. Why didn't you wait till there? Because I didn't know if it was going to get there, right? I've been dollar cost averaging between 80 cents and a dollar, right? So if I'm really, in terms of what you're thinking about on your exits, is exactly what you should be thinking about in terms of your entries. You're thinking about, well, I mean, am I really not going to take profits on these tops here when what's my reward? Well, a little bit more, right? And what's my risk? Well, pretty much pretty high. The risk is all the way down to the downside here. So to me, it didn't make sense to just not take off profits at this level. And this is when we did it about right here. And this was a pretty big down move. No, actually, when did we do that? Yeah, it might have been in May. Yeah, before June, right? And then the reload was in June, right? But that's okay. We reloaded here. Still, sitting through this, right, is not smart, right? Because you could be using principles. If you're not greedy and you just don't care about being right, but just do the right thing in principle, then you're just following your system with correct process. You're not trying to maximize how much money you can get. You're not trying to call the tops and be clever. And you don't even want to be the first one in, right? I mean, even though this pulled down here, and yes, it has great trade location because it's next to a launching point of directional conviction, you didn't have to even be the first one in. You could have waited for the buying tail, let this mature, and then buy up here. You know what I mean? I'm not saying that if you're doing this with great zones, you can't get in on that. But that's the idea, is that you have options when you're thinking about maturity and time, because markets don't just move up and down. They move in a series of thrusts, yes, but then corrections, which often outlast the thrusts. And even within sideways markets, you're going to have trends. So, and within trending markets, overall, you're going to have sideways days. That's just the nature of markets. So that's basically it. We're pretty happy with the performance this week. Could we have pushed into this more? Yes. Given life circumstances and my execution issues, I'm pretty happy that we caught this, because one of the things that happens to you when your fight or flight is initiated, your brain shrinks metaphorically, maybe even literally, and your consciousness isn't able to ignite as fast. So you might actually be saying to yourself, am I really following my system correctly here? I don't know if I am really, you know what I mean? So yeah, quite a turning point. I mean, wow, right? I mean, look how mediocre this was in September, but like October is really showing some strength here. Possibly we're going to get this move sooner because, the rates cuts are coming up, but since everyone already knows they're coming up, right? It's already factored into the price on that day. But maybe not, leading up to it. Yeah, that's a possibility. So let's just see who's in the room here. Okay, we got Eno and we got Ibrahim. What's up, guys? So that's pretty much it. If you guys quick little market analysis about what happened this week with our SUI trade, whatever you want to call it, over 10%. And I like it because it mirrors Bitcoin, so I get the intermarket synchronicity. But do you guys have any questions about the SUI trade or anything? You just keep in mind it's recorded, so if you want to talk business, we'll talk after. But yeah.
Hello, Mr. Matthew. How are you?
Hey, how are you,
Thank you.
sir?
Thank you for your time and for all this information. And I have a question about basket trading. Can this apply to crypto?
Okay, so you said you have a question about what kind of trading again?
Uh,
Just one more time.
Basket trading. Basket trading, this term, I know it from uh, like small time now, but it's in there. When I search it, it's like trading correlated currency pairs to hedge itself. It's like 2 minute or 3 minute trades, open multiple trades as to multiple correlated currencies at the same time and close it and generate profits. So I think what you are talking about, like sweet trading or spot. So I think this like basket trading.
Well, I mean, it is so what I'm doing in terms of using like Bitcoin and to time a SWI entry. right? I really don't use SUI to time a Bitcoin entry. Sometimes I'll
Sorry, I
use it.
can't hear you.
I said, can you hear me now? Hello?
Yes, loud and clear.
Okay. So I guess what I'll try to describe is how I use intermarket synchronicities or relationships to time them. So let's say, Bitcoin, there's good enough reasons for me to get aggressive, but it's not quite at my initial support. Let's just say if Ethereum does hit its low of a day at initial support ahead of time, and there's good reasons for me ahead of time to even be going long that day, then I might jump in early because Ethereum hit its support ahead of Bitcoin. To give you an example today, like I wasn't in a great energy to execute, which is why I've missed some day trades. But like I said, I hit a really good SWE reload for everybody, and everyone's up over 10% in less than 48 hours. So you got to just take the good with the bad. But let me just give you an example of what Bitcoin was doing today. And I just, right. So as it came down here, right, it wasn't quite at the low of the day. If you're super literal with this stuff, you might have a resting order here and you just didn't get filled, right? Because this was the low of the day. You definitely want to be sideways up today. You don't necessarily want to be up, right? Up would mean that as this broke out up here, I could buy a breakout or something silly like that, right? But and I was tempted to do that. It's a horrible trade. I just was like, okay, I'm okay with missing this, right? Because there really wasn't, other than I had a pattern that this was going to be a contextually aligned bounce breakout. There wasn't enough momentum early in the day, even though this was around 9:30 and we've been going sideways for a while for me to trust any breakout. But so what happened was, as this was breaking out, I was patient, 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 right? That's when you would get in ahead of the low of the day here. I think I went to the park to go run hill sprints. You know what I mean? I told everyone, see, patience pays. And I just didn't have the activation energy, just wait one more 15-minute candle to see a little buying tail. And then I would have got in here. But even though it's not at the low of the day, we're going to jump in early because the context called for it. And also look at Ethereum. Ethereum at that same moment in time beautifully hit its low of the day. So if you actually use like the wide double bottom setup where you put a limit order in at your low a day, you would have got filled at Ethereum perfectly here, right? And if you use that mechanically for Bitcoin, you would not have gotten filled, and that's okay. But that's how you can use Ethereum because was at its low of a day. You can jump in, early up here. What you didn't want to do is buy as this was looking like it was breaking out up here, because then you would have had, you could have, an especially wider stop, or like right here, you know. You would have to have a wider stop and stuff. So I mean, the thing is, like, there wasn't a lot to capture here, but really, really, because I didn't get in at the same time I got in at SUI, you keep runners in on these. So I have, like, basically my SUI trade is just, got another 2.37% today on top of the 8 that it got yesterday. So overall, you got to, look at the good with the bad. But this just is an example of how you can use what I call a zone lean, right? I used a zone lean for, if you did jump in earlier in here, you're using a zone lean for Ethereum because Ethereum did hit its low of the day. So that's the idea. Now, the same concept can be used for exits, right? So if let's say Ethereum hits its all-time highs, but Bitcoin is shy of it, then just get out of your Bitcoin too. Take profits. That's how you use a zone lean. Now, all of that is just part of a huge system that I have put together in order to even be able to understand what setup to take, what side of the market to be on, right? Because we have a multiple time frame system, we're able to think in terms of, I think, just patience and timing better than most other systems that don't have this multiple time frame approach. They're thinking in terms of levels and when an indicator hits, but they're not letting things mature. So, what we had for Bitcoin, prior to this, is we were just in this, long term. This time frame was balanced, right? And it's these time frames were the intermediate term downtrends that weren't going to get bullish again until it got to a bigger picture balance, right? This is a balance, right? But this giant balance is really, right, and this one here, right, is bigger than this one. So when it got to here again with this double bottom, it was definitely worth. It definitely had expectancy. Now, if you were a guy that said it had to touch this moving average, well, why? It didn't touch the moving average here. In fact, if you measure the distance from here to here, it's kind of similar to here because that's how price behaved around that moving average last time. So that's how you could use it rather than just use it as strictly support and resistance. You can use it also another category called beauty principles, how it behaved around that moving average at the similar price level last time. So, that's how we got in on that. Now, granted, the thing that can affect your psychology to take a trade like that is that if you listen to a guy like Rand, who's got the biggest, like I have 54 subscribers, and this guy Rand, who has nothing but a budget and zero skills, and I know for a fact there was a guy who's one of their lead educators that was in my channel too, who was trying to like eventually going to pitch me to them or something, which he never did. He just stole my stuff. But the idea is that he used to say like, "Hey, you guys, you and Kobe, you're better than these guys," but they have 1 million subscribers. Okay, so I guess what I'm trying to say is that his last video said Bitcoin's going to 80,000 or something. Well, if you thought Bitcoin was going to 80,000 because you saw Rand's video, and of course, if it did get around to this level, I'm going to be buying because we have a giant bounce breakout here. I mean, of course, I would buy around there. That's obvious. But Rand's not thinking in terms of expectancy. Seeing that kind of psyched me out, maybe from going long on Bitcoin, to be honest with you, that video. I didn't watch it, but the title alone shook me a bit, you know? Now, I still followed my system because I still use it to time this big SUI reload. But could I have pushed more into this and been a little bit more clear-headed had I not seen that video? Probably, yeah. Right. So that's why it's really, you got to be careful to take, those sensationalist headlines with his mouth open and the red face. Well, yeah, he said it right at this day when I'm supposed to be getting ready to go counterintuitively long and when everyone else feels like it's going to break down here or here. Now, if it does that, then I do that, and you're open to being wrong. But the idea is like, did this not have expectancy there? It was a huge double bottom. Of course it did. It's just so obvious, right? I mean, I can go into all the time frame reasons why, but I'm bringing out that example of Rand because like sometimes quality isn't always associated with popularity. I mean, I had one of their guys in here flat out said me and Kobe were better. Does nobody know who we are? I mean, I have another marketer in the room from, I don't know what rank they are, but they're up. I would put them in the top 10 or 15. Crypto Crew University, where Steve, blah, blah, blah. But Steve's claim to fame is that because he's a higher time frame weekly trader, he doesn't have a lot to always talk about, right? I definitely do the weekly stuff too, and I'm timing it very well. And I time portfolio reloads. But because I'm also an intraday trader, I can have a lot more unique ideas that we can do quicker, with less risk in a sense, because we're not holding it forever. On a longer time frame. But he doesn't do that. But what they were trying to do for me is they were going to hire me to run their room, and they still might do that. But it's like I'd rather just build this brand and this system that we do because really there's something unique that we do. Like each day, right, with the system that we have for the day traders is going to be a plan. So like there's always this possibility to do something rather than just sitting back and doing nothing, which a lot of these guys have. And a lot of these other investor type guys that just trade turning points, they really diss on day trading. And it's like, why? There's edge and frequency in day trading as well, you know? So yeah, I mean that's where the system is, right? Like before the next day forms, we're going to do a daily call. Everybody gets that daily call, and then they just, as you're starting out, you're going through a checklist like a robot, like I did for years and years and years. So at a great risk to people that are going to watch this in the replay, to do the sweet trade, do I fill out the sheets that I gave you guys anymore? No, I don't. I flat out don't need to do it, guys. I put in the work. Like I will tell you this right now. I guarantee you guys, none of you guys filled out those sheets for years, paper trading like I did, filling out stats as if it was real money for years. And even while I had money to trade on, I was doing this. And I've been doing this for 9 years. Okay. It'll be 9 years this May. And doing that daily call system combined with what Kobe did is probably 2017. So, but I know there's a lot of people in the room that don't fill out the system cheat sheet. Well, you guys should fill out that cheat sheet because I can see all these things in the probability and I can see which one magnifies best. But like, let's say you weren't thinking about beauty principle here. Well, if you went to the sheet, you would have to think about how price behaved at a similar level and events occur in pairs and there's harmony and so on, all the things that we, ascribe to what that means. Another thing you can think about too, another thing that made this possibility, I also call the possibility for a trend day today as well that day. Or no, that there was a possibility potentially for a trend coming up because You can see here the last 2 days prior to this were very small days. Those are narrower range days. So what you were having there is volatility contraction, right? And I could draw like a little triangle around it, whatever. But anytime you have a volatility contraction, you can increase the probability of a trend out of it. But what really, was increasing the probability of a trend, there was that market moving news around that day. And, just at this strong zone, this obviously doesn't indicate this, but last time we were around here, smooth move up, big move up, creeping up, and then we had the same move. So it could be as simple as that. Now, it doesn't feel like in your body that you want to do it at that moment in time, but that's what this sheet does. It helps you think counterintuitively so you can capture these at the right time. Now, we could say one leg down, two leg down, three leg down. This was like three leg counts down. It wasn't like it was just one leg down count. So, from 5 to 6 is a reversal, but three potentially could be two. So, we'll see how this progresses this week, but venture to say this V is strong, and we are probably going to be attracted like a magnet to this high volume node up here, right? Because basically high volume nodes act as magnets. They go from one to the other. And this wasn't a high volume node right around here where we were buying, right? This is a low volume node, right? It's basically where price does not spend a lot of time there. It whipsaws out. And here, this high volume node is where they spent a lot of time. And, the one up here, like I said, once you draw these things, they can get touchy. But like this node and this node are practically the same size. So now that I took that little data out, it popped up and said this was the biggest one. But you just have to realize that this is the same size as that. So keep an eye on that. Now, I didn't pay this one as much mind. It's not like as I came up here, I was like, okay, now this thing's going to reverse. Let's take. If I was day trading it, I would take profits as it came up into there because I had more options to get back in. But the idea is that, this is in the middle of the zone where we were just trading around it. Whereas when we came up here last time, we had this strong climax selling tail that brought us all the way down here. Selling tail brought us all the way down here. So this high volume node is a lot more contextually relevant than this one here that we just easily passed through yesterday that I was paying no mind to. Because basically how did price behave around this high volume node? We just traded around it. And the real thing that was launching us was the bottom of this giant balance here that we were kind of trending. I showed the direction of it. It's not always just horizontal. Sometimes there's, so, that's how we look at it with this holistic approach. But I don't expect people that are just starting out to like understand all this jargon to see which one's more relevant at certain times. Like I said, anyone that joins from your guys' group is going to get a system. Anyone that joins at all, and people that are already in the group that have been here for more than 2.5 years now, recurring members are obviously making money and using the system to great effect. And not everybody trades the same market. That's the cool thing about this system is that it can be applied to any market. And it also takes into consideration your own unique psychology because you can add categories to it based on your prior training. I don't expect people that have specific training to just completely discount it. It's hard to do that. Like if what you're doing isn't working to the best effect, I'm not saying you have to completely switch everything, but when you do try something new like this system, we're gonna add your let's say you use Ichimoto's or something, you're gonna add that category in because it's going to be there anyway, influencing you. You might as well honor it. But if you really follow the way that the cheat sheet for the system is set up, you're filling out what the setup is for each category, right? And then you add up all the categories at the end to see which setup is going to be most relevant. Like, are we going to have an up setup or a down one, a sideways up or sideways down, or a pure sideways one, or an unknown where we don't do anything because there's just not clarity in a lot of these. And a lot of these are measurable. So it's not like there's this interpretation to them. Beauty principle, yeah, you have to kind of catch that. But certain things like dog leash, that's just measuring how far we are away from a mean. Or are we at, a bull bear or a major support zone? I've defined those, right? One is 2 to 3 weeks. The other one is at least a month of a giant trading range balance or something like that. So, that's what we try to do here. We try to give the signals, give the system. Like a lot of folks, what I do unique here, and when Kobe was with us. By the way, Kobe's coming back for at least 2 times a month to lecture. So I'm basically subsidizing him to come back. He can't come back in full capacity. So just FYI, there's going to be more of a bonus in my room because now you're going to hear the guys from Midas Touch, who's been trading for 30 years and he's in his late 60s now or early 60s. He can kick my ass. I forget what he said. Um, so he's been doing this for a while, right? So we're just going to bring back some energy, bring back a guy who understands patience and has been around the block and seen a lot of different markets. But yeah, but see, I mean, this beauty principle, this unique technique. No one else. That's something I've learned from Kobe, from Midas Touch. That's basically our unique thing at PPT because other people will teach you candlestick patterns. You can go buy the guy's book, but that's if you only study candlestick patterns, then you're not going to understand markets in a holistic sense. And the guy that Nielsen, who does the candlestick books, what his claim to fame was, he was just a guy who was able to translate Japanese to English because he doesn't even trade for a living. Either does Van Tharp or Michael or Douglas Kirk, and I like all those guys. I've read all of them: Van Tharp, June and Van Tharp, Financial Freedom through electronic day trading, and as well as Douglas. They're great psychologists, great stuff. But what they can't tell you is, really what it's like to experience the stress. Like I'm just going to flat out tell you, when I put that sweet trigonal trade on, and I wasn't able to push into my trading account at the same time, my stress levels were out of the really high to even give a signal that day, even though my system saw it. So that's the other thing too is the system actually takes into consideration the discretionary aspect of the person behind the screen, because if you're not in the right state of mind, then that's really the first and most important discipline that we have, is not just following your fixed percent risk model where you don't lose more than 1.5% per trade, but really the real true strictest sense of our definition of discipline is we have to come to the screen with an optimal state of mind. Unfortunately, I'm dealing with a lot of stuff here in my personal life right now that's prevented me from generating that quote activation state that we need to actually maximize everything. But at the same time, I'm not blowing accounts. I'm not trading 20 times a day. I'm not FOMOing into stuff. And we were able to still capture something really important on a turning point here for SUI. So yeah, that's pretty much it for the week. Next Wednesday is when Kobe will be coming back. So just as an FYI, but yeah, do you guys have any more questions about how the system caught that sweet trade or anything else about PPT or anything?
Yeah, I would like to see how you would analyze the S&P. Is that possible?
Yes, actually, I'm glad you asked that because my first market was the S&P. And I come from, that's what I did even before I knew what a Bitcoin was. I was trading S&P E-mini futures. And one of the things that I have for the S&P as an extra edge that I do not have for Bitcoin is the market internals. So the system is exactly the same for the S&P except the market internals, which I'll show you. So the S&P is absolutely on fire. So I remember when I told everybody, when was this? July, right? So like once you break out of a giant structure like this, right? And even before this, like right here, when you had this double bottom, when you were in like obviously we were in a downtrend and then we were in a sideways market, but you're at an area where the big picture is so bullish because of the trend that's more dominant that could potentially reverse the. See how this trend is much smaller in time than this giant one here. So that's why this reverse. I called the tops here 100%. I think I sent you that. I think I sent you that signal, guys, where I said call your portfolio managers and cash in on your stocks because this thing's about to smash down. And then look at this. And even if you were loaded here or here or here, not even perfectly, you still made a lot more money than just holding through this, you know. And that was, that's an important signal that we gave because who wants to sit through that? Now, yes, it did recover. Most wealth managers, you know what they told everybody? It'll be fine. It'll recover. What are you worried about? And yes, it's true. It did break that, but why did we have to sit through that? And maybe it wouldn't have. You know what I'm saying? I know it's a corrupt market. It keeps going up. So, we're in a bull trend. But then when it came up here, the larger time frame bias now went from bullish to neutral because you're not sure whether this is going to be a breakout or a false breakout and go all the way back down, right? Or whatever. But once we broke out of that, right? That's when you have time frame alignment, when the short, intermediate, and big picture are up. Now, as this is going up here, you have to also take into consideration that, yes, we're in this bigger picture bounce breakout, but at the same time, you have to take into consideration the leg count of this trend. If you count up how many leg counts this is up towards our upper limit where we're going to get a reversal, at least on a short or intermediate time frame. Big picture still up, but you got to think in terms of multiple time frames. So, like once this broke down here, right, and you're closer towards the balance breakout spot, that's an automatic long, right? Then up here, right, resistance, and not as strong as up here because we broke up here, right? But then once we got this, it's been absolutely incredible how bullish this has been because, while at the same time, markets that are overextended are prone to pullbacks, the pullback is an opportunity to go long when you have, quote, time frame alignment. And the other thing that we can look at with this, and I don't actively give signals for this one anymore, but I used to do a lot. It's just been really hard with all the altcoins and Bitcoin too. Right. And if we just look at what happened today, so it opens up at around 9:30 here, right? For my time, that's when, see, it opened up right at 9:30 and then it immediately tanked, right? And what was really up there other than you were in blue sky? There wasn't like a previous resistance zone. You're just overextended. There was a trend day yesterday, or at least it had some strength. But was there anything in the Eternals that were giving us a heads up to be cautious here, sideline at the very least, or shorted, right? And at 9:30, I'm just curious. I'm just back testing this. I didn't trade this. It opened up here, right? So at the very least, right, if you thought this was going to trend higher, it's opening up around zero. It's kind of mediocre, right? And is it kind of rose in agony? There really wasn't anything, at least from an 80 lines perspective, that was saying this thing was going to reverse at that point in time. But that's just, I look for divergences and disconnects. Let's see what was happening in the NYC tick. Yeah, you see, as this was trying to rise in agony, this tick around 9:30 was very two-sided. You see how it spent just as much time above zero as below zero here, and it got to like minus 329 and then positive 224, not getting very positive either. So it's not like this thing opened up at some extreme plus 2,000 and then plus 1,000 on the tick. I mean, this thing opened up very mediocre where you were like, oh, this thing is just going to go sideways. Didn't have a lot of momentum behind it on the opening up at the high of the day. Now, what would have been an automatic short is if it opened up near this high extreme and, this thing was like at minus 860 on the open, right? That would have been a negative disconnect. You just get really confident and you just take that. But, it opened up around zero to positive, which is what you'd expect, right? Because what is the NYC advanced decline line? I could use the S&P 500 advanced decline line, but the NYC one gives me a broader market view. It's pretty simple, right? It's basically like when this closes, you want to see how many stocks are above or below yesterday's close. Well, this price went higher, but not tremendously higher. So you would think there'd at least be some stocks above break even or around break even. You wouldn't think it'd be super negative, which it wasn't. It wasn't giving us any information that price wasn't. It was this that was telling us there was zero buying pressure because it was two-sided, giving you a warning to just back off. Definitely don't go long. And, I'm not saying you had to short that, but that was the idea. Like just simply a lack of strength when things get overextended can be a reason to short. But I'm not saying that this was a great setup to even take. I'm just kind of demonstrating a little bit how I use these two indicators in conjunction with this daily call. Now, keep in mind these two indicators are lower time frame indicators. I'm not just going to go looking for setups using this. Always do that daily call ahead of time before the market opens with our system, and then that would get like so. Example, if I made a sideways daily call for the S&P, then I could come in and I would be shorting the high of the day, selling, buying the double bottom at the low of the day and just going back and forth. I'd be prepared to go long and short in the same day. And then what I would be looking for to confirm that would be two-sided market internals, which these are. This was just going back and forth. And then when it kind of crashed down here at 11:15 and 11:45, let's see what was happening. Yeah, I mean, there wasn't anything that was giving us a huge, is at minus 1,000, anything really super big there wasn't any bullish divergence or a disconnect at this point that was going to help us go long here if you did, other than, nothing from these internals. Um, you have time frame alignment, so you can do that from a higher chart perspective, but there was nothing on this lower time frame. Let's just see what was happening at 11:35. Yeah, I mean, it was hitting a tick extreme, and there was this bearish skew. So there was nothing like super crazy about in the internals that said this thing had a reverse. But guess what? You could literally turn these internals off and you could still trade the S&P with this daily call stuff. In fact, I don't even really like to teach a lot of these secrets of these market internals that a lot of people don't know about, because then they start to get blue car syndrome. They'll try to short every disconnect or buy every divergence or a double divergence without doing like the same thing too. Like, why don't we buy every momentum thrust like a pullback continuation setup for a trend? It's because we want to come in ahead of time with a lot of pre-market factors that increase the probability of a trend so that we're prepped for it rather than, reactionary, not having a plan, seeing something, getting excited and realizing, oh, I just bought an up thrust and now it just reversed on me because I just bought the high. You know what I mean? It's something like that. We don't want to do that. And that's really what that daily call does is it filters out what not to do. And that's half the battle. So hopefully that answers a little bit more about how I see the S&P with the internals. I haven't actively been covering it like I usually do, but there's been plenty of action in Bitcoin and SUI and Ethereum. But yeah, just unbelievable. I mean, it's just even been even more bullish than Bitcoin. I mean, the people say gold might be cooling off, or it's just wild, this S&P. So quite a time to trade. If you were a bull trader in the S&P, you rode this trend up pretty well. But at the same time, there's other opportunities in other markets as well. You can see the ES is only up 0.04% on the close, and our altcoins and Bitcoin are up a lot more today. So that's what we do when we honor the principle of choices. So yeah, guys, I mean that's pretty much it for a market review. I'll keep at it. I'll keep sending you guys those signals, and we'll keep on keeping on. Tomorrow's a Friday, so usually there's a give back Friday scenario. I try to like get a little bit less aggressive on Fridays, but we'll always do the daily call to filter a possibility, and there might be a setup. You never know. So. All right, guys. Well, thank you for coming out. If you guys have any last questions, now's the time. Otherwise, than that, this is it.
Uh, yeah, Matt. Do you, when you trade the S&P 500, also look at the Dow and the Nasdaq, or is it really that you focus on one market when you trade the indices?
Yeah, so that's a good question. The same way that I use the intermarket relationships to do the zone leads and zone exits for Bitcoin and Ethereum, I would use the same intermarket relationships for the ES. Now, like if I was doing that previous example where I was thinking about maybe going low, fading the 15-minute double bottom on the low of the day, I might then go to, or I not even might, I would definitely go to the NQ and the RTY Russell, and I would see if they were at good support, right? And that would add a little edge. Okay, this one's not in a downtrend, it's at support. We're good. It didn't just break something. Any extra edge I can get via the system I'm going to use, because we need every edge stacked in our favor to have an edge in a very competitive market. So yeah, I use it the same way, but I would recommend if you're trading the S&P 500 to use the Nasdaq and the Russell for those intermarket synchron. In fact, I'll do that as an educational post tomorrow. I'll show I think there's 3 setups that I use for intermarket synchronicities or relationships. I already talked about the zone lean and the zone exit, but there's going to be like intermarket divergences. If there's a huge divergence in the Ethereum at resistance and Bitcoin doesn't have one, that might be enough for me to exit my Bitcoin for at least partial profits. something like that. So every edge that we can get, we'll go for it. But just let you know, like whoever comes in the room, whoever comes a principal profit trader, I'm going to give 110%. I'm pretty much, unless there's something preventing me in my life circumstances, I'm in the room like 7 days a week and try to render as best service as I can. In fact, this Friday, I'm doing one-on-ones with people. So it's more than just me performing and giving signals, which I think is value enough for people that just want to shadow. Literally giving away all my secrets and coaching at the same time. So that's what you get with me, guys. 100%. And I'm bringing back my old coach and trading partner too for extra edge too. So it would definitely be a good time to get things going because anyone who comes to PPT is now going to get a super bonus with Kobe coming back. So, but that's it, gents. Thank you very much.
Thank you, Matteo. This sounds really
Thank you,
great and
Matthew.
Yeah,
awesome to be
I
here.
look forward to working with you guys more and you guys checking out my signals and stuff and you'll get to meet Kobe and we'll keep on. You guys know where to find me on WhatsApp. So, all right, gentlemen.
Brilliant.
Thank you guys. Thank you guys for whoever is listening. Hopefully you guys all made some money on the SUI call and you guys know where to find me. Take care, guys.